I'm about to answer a number one question that is on every trader and investor's minds right now in the markets. Let's get into it. I'm Pat Mitchell. I've been a professional trader for the last 11 years plus, and tonight we're going to be discussing, is the stock market about to crash? I know it's one of those typical, the market's going to crash, is the market going to crash? But actually, it's a pretty interesting story. So this evening I was working alongside my son, pulled up the charts, and he's doing an essay on market trends. So he asked if he could have my help, and of course I'm going to help him. And towards the end, we're going over and we're discussing trend, uptrend, downtrend, really basic stuff. And then I talked a little bit more so about macro trends, like the idea of the market and what stages we're at and why we're at. And that's kind of a whole separate story. But then I took a look at the volume, and the volume, I actually discovered something pretty interesting when it comes to trend. And let me pull up the charts. I'm going to show you what I'm talking about, and I'm going to give you some reference points and then overall what I believe is going to happen. So let me pull up the charts and let's get into it, folks. Okay, so now that we're in the charts, I've got SPY up, which is generally what I use as a reference. Now I have the daily chart up, and with TradingView, I can't quite get as far back as I want to get back. It's right in this area that I want to get back to. So what I had working with my son, I had the weekly chart up. Now I use different time frames generally if I'm looking for bigger picture ideas like swing trades or long-term holds. But what we started looking at, and I started kind of, breaking down the chart into a few different areas. And we have 3 to 4 stages of the market. Like I said, I'm not going to go over this too much. I did a full mentoring live class on that, and I don't want to bore you with it, although it's really interesting. But when I started looking at it, and just started looking at overall trends. And, when we're talking about basic trends, we have a consolidating and then an uptrend, and, we have some downtrend, micro and macro trends, real basic stuff. And then, like I said, towards the end of that, what I found pretty interesting, if you take a look at the volume. So I'm going to move this up. And what I want you guys to notice, and I know it's very normal and natural when we have these pullbacks in volume. We have a big pullback here, pullback here, pullback here, and then we have this. So it's okay for markets to pull back in volume, like volume overall trend. But what I found interesting here, and I want to erase this and then grab my crosshairs, and I want to pull the crosshairs right to the bottom of that. Okay, and actually maybe I'll snap a level here. There. Okay. So we have a level. If you take a look here, guys, we're actually in a pretty alarming zone of volume. And volume is extremely low. If you look to the left, so when we're looking at this, start here and then look back this way. Look left. That's what we always need to do as traders, is look left, because that's the history, right? And history has a tendency to repeat itself. So when we're looking left, we have not hit this until right here, which is what? July of 2005. Now think about that. That is an extreme low volume market that we're in right now, which is interesting. So what happened very recently after 05, what I just pointed to? Well, 2 years later, and I know it's a little silly to say it out loud, but 2 years later was 2007. Well, what happened in 2007? 2007 was the mortgage crisis, the mortgage and the housing crash. And that's right in this area. Now, you might be saying, if I snap my crosshairs right when the market kind of topped in this area right here, that volume is really, really high. And you would absolutely be correct. Now, I want to pull this down so that we can see the chart a little bit easier, okay? So if we're taking a look at the peak, which is right here, we'll go here because that was a double top. And then what did it do? Well, from this point on, it sold off very hard. So you might be wondering, if we snap our crosshairs to get a reference of volume, well, volume's really high leading into that. So number one, why does that happen? Well, that happens because of dumb money. Okay, so dumb money, retail traders generally will try and buy a breakout, right? And they give in to hype or buzz, or anything that is really being talked about. When we get into all-time highs in the market, generally we'll continue going higher, or it'll rush into all-time highs. That's because retail traders, dumb money, want to buy that market because they're afraid they're going to miss a breakout. Now, what happened here in '07 was basically a lot of banks failed, over leveraging, all of that really bad stuff. A lot of people lost multiple properties and their houses and everything else. It was horrible, right? And it crashed. Now, if we take a look and we go back and we look at this red line that I put out, and I should actually change this to a different color just so maybe it sticks out a little bit better for us here in this example, and I'll use a dark blue. And then that way we can maybe get a better look here. So right here is where it actually touches in July of 2005. So you have that 2-year lead up. So let's take the crosshairs to July of '05, which is right about here, right? So you can see it's trending in this area and it starts breaking out, and it's actually uptrending. There's an uptrend there, and that's coming into what? All-time highs. Now, granted, it took a while for it to come, but what happened right here when it broke? You see this rush right in here? That rush up into all-time highs, that's where the volume really started to come in. And that's because of fear of missing out. People don't want to miss out on that, right? So why is that important? Well, I'm explaining that because I'm trying to point out that volume right now is the lowest it has been since July and previous of 2005. That's really interesting. So to break things down to a really elementary level, what happens with trend? There's healthy trend and then there is unhealthy trend. Healthy trend looks like this, right? A nice slow rise, and then an unhealthy trend looks like this. So what makes a healthy trend healthy? Well, it creates areas for a new round of investors to come in on these pullbacks, right? So when it pulls back, a new round of investors, maybe you, maybe your mom, maybe your dad, maybe your uncle, your cousin, wants to get involved with the market. Well, they can. It's easy for them to do that, right? They can simply buy these lows, or maybe when it creates, the typical, it bottoms, creates a higher low, and then starts pushing back up, right? They can do that, and it's safe, and it's easy, and it's a fair and just price point for everyone to get involved with those markets. And you can see in a healthy market that happens multiple times. All you really need to do is wait a few months or maybe even a year, and then you can buy in again and you can add to your retirement savings and so on. But it's very difficult in an unhealthy market, which is here, to do that. Because what do? These pullbacks are not fair, and it's not a just price. It's an unfair price. So this creates, if you were to buy this here, and it comes into highs, and maybe you're looking for that breakout, and just as it breaks out, you add in. On that pullback, there's not a lot of distance before what? That bottom falls out. And then all of these people that are in here are left either holding the bag or they're going to panic sell. And that's essentially what makes a healthy market, which is this, and an unhealthy market, which is this. That's what makes a healthy market healthy, essentially. So we're in a very unhealthy market, aren't we? So is anybody buying this market? No, nobody's buying this market. If you have any sense, now I'm not talking on a day trading perspective, guys. Day trading, you can get in and out. There's always a long and there's always a short each and every single day that the stock market is open. I'm not talking about short-term trading here. I am thinking more swing, investment, that type of thing, longer term holds. You are not buying up here, folks. You can't. Because why? It is not a fair price, and it's very easy for the bottom to drop out. You would be a damned fool to be buying this market to hold long term. Generally, right? We don't know if the market, it could keep going up. There's always people that are perma-longs, and I get it. Markets are designed to go up. I get it. But it's about being smart in your decisions, and this would not be a smart decision to buy this market. And that's right now, if you take a look at how unhealthy this market has been for the past long time, like 5 years, 6 years, even longer than that, it's been a very unhealthy market. We have very sharp, steep uptrends, unhealthy trends, and then we have huge crashes back down. So it makes it people, especially once we start getting into all-time highs or really extended markets, it's hard for people to buy that. That's why that volume is decreasing the way that it is. So if you go back, again, that's why this ran up the way that it did, because people want to buy that market. And that's kind of what happened in this area. As we approach these highs here, on this little pullback, it's still fair because we just pulled back, right? So people are getting in, they want to buy that breakout. But now people are definitely wanting to pull some profits, because any pullback here, it's not going to be, that's 20%, by the way. So from all-time highs to this peak is about 20 to 22%, I believe, off the top of my head. So that would be considered a bear market. And it could continue to go up, but people will wait for at least this to buy. Volume is drying up. That was a long-winded way of getting to the point that volume is in fact drying up. So this isn't your typical, the market's going to crash based off of some, the personal opinion. This is what the stock is telling us. This is what the chart is actually telling us. So what do we do about this? Well, I put out a video not that long ago where I gave in detail the price points that I would be buying. Now, you could short this market. Sure, you could do that. But you are playing with fire when you do that. If you're someone that wants to, because on any big pullback, all you're looking to get is about 30%, maybe 40% on a really big pullback, right? Sure, that's a lot of money. Don't get me wrong. It's a big ROI, return on investment, but it's not as big as the potential run back up. So what I've developed is a price point system and a percentage system to where you can start averaging in on the pullback. Okay, now you can go take a look at that video. It's on my channel right here, which reminds me, please make sure to subscribe. If this is your second time watching any of my videos, you owe me a subscription as you subscribe. I think that's fair. I don't ask for much for this free information. My channel is full of amazing free content. So, go check it out. Make sure to like the videos. And if this is your second time watching, please subscribe. So on that note, back to the point here. So what do we do with this? Well, if we know that this is going to be coming, like I said, you could short this market. You could. But I like thinking more long term. What is the bigger play? And yes, I did capture a huge short on a day that happened recently, which was my absolute biggest trade. Another video that I put out there, and I show everything and I detail it for you guys. So go check that out. But I think the bigger play is really waiting for that long. That long to focus up on essentially starting to taper in at that 20%. And then as it goes lower and lower, which it will, because that volume is just so incredibly low, it's going to have to get new rounds of investors properly. It's going to need to pull back a sufficient pullback. Now, I'm not saying that it will, but I do believe that we could see as low as COVID lows. That's a massive pullback, ladies and gentlemen. I'm not saying that that is going to happen. So I think where we could potentially pull back to, like I said, absolute lows, worst case scenario, I think we reach COVID lows. That's a big pullback, and I believe that is 60%. Yeah, that is 64%. That's huge. That would be a massive pullback, okay? And I'm saying that is worst case scenario. A more realistic price point is probably going to be somewhere in this point, right here, where it came down to before. And I'm going to explain why. Remember at the beginning of the video where I was breaking down those macro markets? Well, right here at highs, I talked and I had a mentoring live class, and I said we are going to pull back, and then we're going to get locked into a 3 to 5 year consolidation. Now that didn't happen, and I'll explain why it happened. So when we pulled back here, I knew that was going to happen, not because it's being predictive, because of other reasons. That, again, that's part of the whole mentoring thing. It's not applicable to this, so it's fine. But I said we would most likely, for 3 to 5 years, essentially do this. Now, obviously, that's a pretty wild consolidation, but you guys get the point. So what happened? Well, I believe we had political motivation in order to break this market out, and a little bit of fuckery, to be honest. And I do believe that that was a way to not have a certain political party have like an X against them in the upcoming campaign that is obviously over. The Republicans had won, Donald Trump had won, but I do believe that this market pump was fairly political motivated, and that was an oversight by myself when I was talking about this consolidating for the next 3 to 5 years in a healthy market. Mark my words, okay? You're gonna have to trust me on this one. If that did not happen, and I know we're talking what ifs, right? But if it didn't happen, we would have consolidated for the next 3 to 5 years, and then either broke out or broke down. Doesn't matter. But that's what's important here. This here is a fallacy. This is politically motivated, and it is something that they tried doing in order to get one administration in, so that they couldn't say that the stock market was in horrible shape coming into an election. It was one less talking point that Trump would have been able to have. So that's one of the reasons. So for this reason, that's another reason why the volume is drying up the way that it is, because you don't have the institutions as well as other entities buying up this market for the sake of buying it up. And if you're thinking for a second that they wouldn't do that, you're absolutely out of your mind. They would do that. There's a lot more money than just buying up a market. But I'm getting a little sidetracked. But I do believe that we could get back into this range, okay? And get back to normal. And this would be what I consider normal. This channel in here. That being highs, come down, come back up, come down, come back up, come down, whatever it wants to do for the next 3 to 5 years. And I do believe that we will come down. Right here is 20%. When it breaks that, I would start in here, very small, because it can pull back further. And then at 30%, 35%, 40%, 50% is where I start applying huge pressure in my trade, and which I believe is somewhere in this area. And then this 60%, if we were to get down into COVID lows, that's where I'm laying the hammer. Absolutely. This isn't quite finished yet. Don't go anywhere, guys. I'm going to get rid of these drawings, and I want to zoom in on this because it's pretty important. So when we take a look at this in May, right here in May, is where it really started to take that steep dive. So from May on, this is trending pretty hard. So what comes next? Well, according to history, we should start shooting back up in volume before the big crash. Now, I don't know if that's going to happen, but that is something to watch out for. If this pulls back, let's say it pulls back somewhere in this area and comes back up into highs and touches those highs, be on your guard, guys. Don't be buying those breakouts because the end is very, very close. And remember, these trends don't lie. This is an opinion. This is something that is backed by the charts. And we have not, remember, I repeat, we have not had this low of volume since 2005. That is interesting. So that's kind of my idea with this. And that's why I always recommend just going over the charts. Just look at the charts. You know, chase the charts. Feel the charts. Take a look at every angle, right? Not just the chart, like the actual candles. Look at the bars, which is the volume. Look at that. Look at different timelines. Get an idea of it. This is, again, this is not for a day trading perspective. This has nothing to do with day trading at all. This is long-term or swing or investment. You have to know what type of trader you are, and you have to know what type of trades that you're looking for. So on that note, folks, if you want to come get educated properly and professionally, come to tricktrades.com. Or if you're not ready for that, that's fine. I understand. Make sure to check out my YouTube channel here. There is a ton. There are hundreds of videos, free video lessons that will simply blow your mind that it is free. Go take a look. Make sure to subscribe. We'll catch you on the next one, guys. Adios.